Look, the key question for us is really, if you claim that demand is unlimited, it's huge, it's all coming now, then the question is, why do you lower your mix? Why do you lower your pricing? That just doesn't make a lot of sense to me. Pricing is always a big issue for every P&L of a car maker, and the same for Tesla. The gross margin disappointed in the quarter. The company just lost $700 million on a net basis. It burned almost $1 billion in cash. And the product is quite old. I mean, the S and the X are, quite advanced in any normal life cycle of a product. So they would really need significant refreshes in order to restore the pricing.
Now, management made an interesting comment that Tesla delivered half of the quarter's numbers 10 days before the end of the quarter. And what does this say about their execution capabilities?
Well, we've seen that before. To be fair, it's obviously less than ideal. It's adding to the margin pressure if you have to force your product into the different channels. It's something, again, for any normal car maker, it would raise a lot of red flags why you can't manage your shipments on a, more sustainably. It's very bad for cash flow. It's very bad for working capital. It's bad for pricing. So operationally, this really needs a fix. Again, we've seen that in the past, and they've promised a fix before.
Now, one other big question institutional investor is looking for an answer to yesterday was around the possibility of a capital raise. Elon Musk didn't give a lot away. I mean, where do we stand in terms of a potential capital raise? How much could we be looking at?
Well, I would say Elon opened the door. He said, he's more open to the idea. Pretty much every analyst, including ourselves, we're not alone here, has been calling for fresh equity for quite a while. Obviously, it would have been easier or better for investors at a higher share price, at better demand levels, less pricing questions, a less erratic Elon Musk as well. Doing it at these levels and at this state, it's just really getting more and more difficult.
On your point about a less erratic Elon Musk, he's been embroiled in scandal after scandal with the SEC most recently, a lot of back and forth. At this stage, is he a real liability to the company?
Many people would say so. I would still say that Elon is really part of the brand. He's part of the reason why people love Tesla so much. He's obviously hugely creative. The question is, should he run the operations of the business, or should he be more like a chief advisor, brain of the companies, focusing on so many other things? Tesla is now a huge business. So I'd say more and more people would say that someone serious, very senior should come in to run the operations for him.
And to your point about their models being old now in large part, they did reveal their long anticipated Model Y crossover SUV. How much potential really is there for this product to become a more prominent feature in their lineup?
Well, I think the product will sell, the Model Y, as the Model 3 will sell. The question is, he's promising like 1 million of sales in a very, short time from here. And that's something that I think is quite unrealistic, also because there's so much demand coming from Porsche, from Audi, from the Germans really in Europe. For him to enter the European market in scale will be difficult. Same will be true in China. So I just think the general market conditions for him will be more challenging. The brand will just be less exclusive as it's been in the past.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.